The big news for UiPath stock investors is that the management team said that they expect free cash flow growth rates to accelerate over the next several quarters. That's a big positive for the company that's been trying to recover from a leadership change at the top that disrupted operations. So let's take a look into the details that's driving this increase in cash flow for this interesting automation and AI company.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So UiPath CFO saying that they now have approximately 10,790 customers. And when you think about the total number of businesses in the US alone, you can see what a small fraction of that market opportunity they have captured with its automation services. The management team saying that dollar-based gross retention of 97% continues to be best in class, and net retention rate for the quarter was 113%. This means that customers that are spending more than a year with UiPath are increasing their spending with the company. And that's usually a good sign, because if they're not liking the service they're getting, they won't be increasing their spending. And if they're increasing their spending, it demonstrates that they appreciate the value of what UiPath offers for the price that they charge. And you'll know that the customer value proposition is one of the most important things in my framework for investing in stocks. You've got to find the business that offers good value to their customers, because that means the business is sustainable. Customers will keep coming back. Other customers will find the company and continue coming back to the company. It's evidence that the company offers a good value. That's sustainable revenue. And then if they can do that, combine that customer value proposition with unit economics. Can they do that profitably? Because any business can offer a great value, but can they do that at a low enough price to generate profitability? That's the big goal in business. Can you offer good value at a reasonable cost so that you can have some profit for yourself? So UiPath's platform will now be standardized across all Alliance business units as their strategic AI and automation vendor. And this customer is expecting productivity gains of 50% and cost reductions of 40% where AI-powered automation is implemented. Now talk about a customer value proposition. Productivity gains of 50% and cost reductions of 40% implementing UiPath's services. Now, if you're offering that kind of value, and I know they've hand-selected this one case that is so beneficial to present to investors. Not every business is going to find this kind of improvement in their productivity and cost reductions, but this just highlights the potential. If UiPath services are utilized effectively, the benefit it can have to a business. The company reported revenue of $355 million, which was a 9% increase year over year. But more positively, remaining performance obligations increased by 13% to $1.128 billion. Generally, when you see remaining performance obligations increasing faster than revenue, that's a sign that revenue is likely to accelerate in future quarters. The company is signing more new contracts than it is serving existing contracts. Remember, when UiPath signs a contract, a deal with the customer, that deal first goes into remaining performance obligations, and then as UiPath serves that deal, it turns into revenue. So remaining performance obligations eventually turn into revenue. The company did report an operating loss of $43 million on GAAP principles. These are generally accepted accounting principles, but this included $87 million of stock-based compensation, which is a non-cash expense. So this will be things like stock options and stock grants that UiPath gives employees to incentivize them for performance, right? If an employee has ownership in the company, they're more likely to be performing at their best if they are incentivized with ownership. If they don't have any ownership in the company, they don't really care if the company performs well or not. They just want the company to do well enough so that they don't lose their job. Otherwise, they're not trying to do their best to get the company to hit their next goal so that the stock price can increase, because they're not going to benefit from the stock price increase. Well, if they have stock, they will be motivated because they will benefit from the stock price increase. The company has to account for stock-based compensation on their income statement, but they're not parting ways with cash. It's a non-cash expense. So that allows a company to give employees compensation to incentivize employees while conserving cash. And that's important for companies like UiPath that are still in the early stages of growth to generate cash flow so that they don't need to go to investors and ask for more money. Especially, they don't need to go to investors to ask for more money in a desperate position or in a negotiating in an out of power position where they're going to have to pay higher cost of capital to get that money. Speaking of which, the company, as of October 31st, October 31st had $1.6 billion in cash and marketable securities and no debt. This is what I call a pristine balance sheet. A balance sheet with close or more than $1.5 billion in cash and zero debt puts the company in an extremely strong position. And to make that even stronger, they're generating positive cash flow, and they're, as I'll share with you in a little bit, they're forecasting increasing cash flow. So one of the ways they're using this cash is buying back their own stock, which management feels is undervalued. They repurchased 13.8 million shares in the most recent quarter, and this was at an average share price of about $12 per share. So for the fourth quarter, they are forecasting an increase in non-GAAP operating income to $100 million. And they're telling investors that they're going to provide more guidance for their fiscal year 2026 when they report their fourth quarter results. And that's always good news when a company forecasts their next fiscal year. I always say the more information management provides investors, the better. The more transparency, the better. It has the impact of reducing risks. If management gives you some guidelines to where their performance is going to be in the upcoming year, investors can narrow the scenarios that they need to plan for. And if they can narrow those scenarios, that reduces the variability in the outcomes, which means lower risk. And investors always should consider risk in combination with potential return. And so when you decrease risk, you increase the price that investors are willing to pay for an investment. And finally, here's that great news that I highlighted in the beginning of the video. They believe that for fiscal year 2026, their adjusted free cash flow growth rate will accelerate. And that's great to hear. Not only will they increase their free cash flow, but the rate of increase will increase. So financially speaking, UiPath is in a great position, and that position is improving. You saw over $1.5 billion in cash and no debt. The cash flow is positive, and their adjusted free cash flow growth rate expected to increase. Hey everyone, if you like watching my videos, then I've added a great complimentary product just for you. I've written a book that's available for sale now that highlights my 6-step investing framework. Even if you don't follow that investing framework, just reading it and knowing how I evaluate stocks will make it a lot more interesting and informative to watch my videos. I've added the link in the description below.